There's a number that appears constantly in Bitcoin coverage. It goes up, it goes down, and people treat it like it's obviously important. But here's the thing, most people read it wrong. And when you misread it, you end up drawing completely the wrong conclusions about what's happening in the market. The number is called Bitcoin dominance. And once you understand what actually drives it, you'll start seeing patterns in the crypto market that most people miss entirely. I'm Sats, and today we're making Bitcoin dominance actually make sense. Let's keep it simple. Let's start with the definition, because it's simpler than most people expect. Bitcoin dominance is just a percentage. It tells you how much of the total cryptocurrency market is Bitcoin. If the entire crypto market is worth $1 trillion and Bitcoin accounts for 600 billion of that, Bitcoin dominance is 60%. A market share figure. Nothing more complicated than that. Now, why does that number matter? Here's what most people miss. Bitcoin dominance isn't really about Bitcoin in isolation. It's about the relationship between Bitcoin and everything else. And that relationship tells you something genuinely useful about where investor money is moving and why. When Bitcoin dominance is rising, Bitcoin is growing as a share of the total market. Either Bitcoin's price is climbing faster than other cryptocurrencies, or everything else is falling faster than Bitcoin. Either way, the signal is the same. Investors are favoring Bitcoin over everything else. They're moving toward the asset they trust most. When Bitcoin dominance is falling, altcoins are growing faster than Bitcoin. Money is rotating out of Bitcoin into smaller cryptocurrencies. This is what people refer to as altcoin season. Now this is where it gets interesting, because there's a pattern here that tends to repeat. In a typical Bitcoin market cycle, dominance tends to rise during periods of fear and uncertainty. When markets are nervous, investors retreat to what they know. In the crypto world, Bitcoin is the asset with the longest track record, the deepest institutional backing, and the clearest purpose. It becomes the safe harbor within an already volatile space. Then as confidence returns and Bitcoin stabilizes or rises, some investors start chasing bigger gains elsewhere. They rotate into altcoins. Dominance starts to fall, the altcoin market heats up. Then something shifts. Confidence fades, a market event shakes sentiment, and investors rotate back into Bitcoin. Dominance rises again. Once you see this pattern, you'll notice it everywhere. Now here's the part most people get wrong, and this is important. Rising dominance is not automatically good news for Bitcoin. Falling dominance is not automatically bad news. The percentage can move for multiple reasons, and the context matters as much as the number itself. Here's an example. If Bitcoin's price is completely flat but every altcoin is crashing, dominance rises. That's not a sign of Bitcoin's strength. It's a sign of broader market weakness. And equally, if Bitcoin's price is rising strongly but altcoins are rising even faster, dominance might fall even though Bitcoin is performing well in absolute terms. This is why reading the headline number alone is misleading. The direction matters less than what's driving it. So how should a beginner actually use this? Honestly, with caution. Bitcoin dominance is a useful piece of context, not a signal for action. What it tells you is roughly where investor sentiment sits in the cycle. Dominance consistently above 60% tends to suggest a more risk-off, Bitcoin-focused market. Dominance dropping toward 50% or below tends to suggest a more speculative, altcoin-friendly environment. For someone who holds only Bitcoin and has no interest in altcoins, the direct relevance of this number is limited. The main reason to understand it is that you'll encounter it constantly, and knowing what it actually means stops you misreading headlines. Bitcoin dominance hits new high. Sounds bullish, but might just mean everything else is falling harder. Bitcoin dominance falls to 2-year low. Sounds bearish, but might mean Bitcoin is up significantly while altcoins are simply up more. Context. Always context. Here's the thing worth sitting with. Despite thousands of cryptocurrencies existing, Bitcoin has consistently held the largest share of the total market throughout its entire existence. Not because it's the newest or the fastest or the most technically sophisticated, because it has the longest track record, the clearest purpose, and the deepest institutional trust. That percentage fluctuates, but the position hasn't changed. That consistency is part of what makes Bitcoin different from everything else in the market. All right, let's make sure this lands clearly. Bitcoin dominance is the percentage of the total crypto market that Bitcoin represents. A market share figure. Rising dominance means investors are favoring Bitcoin over altcoins. Falling dominance means altcoins are growing faster. The pattern tends to repeat with the market cycle. Fear drives dominance up, confidence drives it down as money rotates into altcoins, then back again. But context matters more than the number itself. Dominance can rise while Bitcoin's price is flat, and fall while Bitcoin is performing well. Always look at what's driving the move. Despite thousands of alternatives, Bitcoin has held the top position by market share throughout its entire history. That's not an accident. Now that you understand why investors keep rotating back to Bitcoin over everything else, the natural next question is what actually makes Bitcoin different from all those other cryptocurrencies in the first place? That's exactly what the next video covers, and after this one, it'll click in a way it might not have before. Stack smart, stay curious. See you in the next stack.